Well, I think it's one you can own. I think, the market's struggling with what rates are going to do and what the yield curve is going to do, and that's a recurring theme. There's nothing new there, but the market is always reminded of that. I think, his desire to push into lending, I mean, that's okay, but if you look at the other lenders out there, they're not trading at very high multiples. So, I'm not sure if a balance sheet strategy is the right way to go if you want to have a high multiple, and you've got to fund it somehow. So I'm not so sure about that, but having been in the lending business my whole life or my whole career, that can be a tough business to run if you get too big and you don't have a deposit franchise. So we'll see what they do there. But I think the high quality financials are the place to be. It's almost like a place to hide because they have the earnings to withstand higher rates and higher credit. The problem is that you're battling, an earnings season that's been okay, and now the non-financials are reporting and they're okay. I mean, it's partly cloudy to maybe almost raining. You're not hearing a lot of great news about this supposed blowout economy. So we'll see how it goes.
Yeah. Paul, when the market gets knocked around like this, some people say, well, that's a signal to get defensive. Others will say, here's your opportunity to buy pullbacks in some more aggressive names. Which side of that would you come down on?
Mike, I think at this point, the market's got at least one more leg higher. So it'd be really hard to throw all the previous high flyers down. Clearly, I'm for the most part, a non-fanger. I think the fangs that have rolled over are not places that I'd go. But I wouldn't abandon large cap growth for sure. But I think at this point, listen, market's down, pullback's not over. It's a complex pullback. We'll get through it around the election time. But there's a lot of beaten down names, that are so out of favor that unless they're going to zero, which they're not, I think you have to look at.
We showed some of those names like Gap, Newmont Mining.
So listen, gold, you can't find a more unloved sector probably in the world today. It's one of the best run companies in the world. They're gobbling up all the competition. It's the big 800-pound gorilla. They smartly leverage to gold, and smart money is buying gold. That is a wonderful, non-correlated, doesn't dance with the stock market. It's kind of on its own. It gives you some kind of, I don't want to say a hedge, but something else in a portfolio. And you mentioned Gap stores. You can't find anybody who loves the Gap anymore, right? Listen, it has no debt. They've got a wonderful online presence. It is really super out of favor. And dividend yield now, it's 3.5-ish%. I think their dividend yield is going way, way, way higher.